Alright, so the next few videos, right? Or yeah, the next few videos we're gonna be focusing on higher time frames, yeah? So this is just an introduction to the higher time frames, yeah? And it's gonna get a bit tough now because I'm gonna introduce a lot of algorithmic theory. If you don't understand the algorithmic theory, I haven't really introduced it too proper yet, but essentially it's an algorithm that runs this market. Think about it, it's an electronic market. Back in the day, right? The markets weren't electronic. It was literally exchanges, yeah? So it wasn't algorithmic because there was no electronic platform for the algorithm to run off of. Because you can't put an algorithm in a marketplace run by people. It has to be electronic, right? A few decades ago, it became electronic. Everything became electronic a few decades ago, or like 2 decades ago. And when it got introduced electronically, that's when algorithmically you'll see prices start to be delivered. The two things that the algorithm aims to do in the market is deliver liquidity and rebalance areas of imbalance. That's the objectives of the algorithm. Now, what does the algorithm run off of? What's the script that the algorithm runs off of? It is time and price. And we will go into that a lot more as the teachings unfold. Everyone wants to know their bias. Yeah, everyone wants to know their bias. Whether you're a swing trader, a day trader, scalper, whatever it is, everyone needs a bias. Now, I'm assuming that most of you are intraday traders, day traders, scalpers, right? You're trading within the day, right? Let's just approach it logically, right? For a second, let's just approach this all logically. If you're intraday or you're scalper, you're trading within 24 hours, right? So in saying that, you need to know where that daily candle will go. Think about it. If you know that this daily candle was going to close bearish, what do you need to do? Would you buy or sell? You would sell, right? You would sell. That is what trading boils down to when it comes to bias. You need to know how that daily candle is likely to close. If you know how the daily candle can close, you just need to get in line with the daily close. It's that simple. It's literally that simple. And people don't approach trading like that. They just get too stuck on the 5, the 15, the 30, the 1 hour. They get stuck on all those time frames. If you know where that daily candle will close and you can get in line with a trade that is going to be in line with that daily close, you will have success within that day. The hard part is, Omar, how do I know where that daily candle will close? That's what we're going to go over. In the next few teachings, we're going to go over that. Yeah? In saying that, if you know that that daily candle, sorry, will close bearish, what do you want to do? What you would want to do, right? So this candle, we see that this candle right now is the today's candle. This is the high. Yeah, this is the open of the candle, and this is the high of the candle. Yeah, this wick is the high of the candle. If it's going to close bearish and you have confluences that line up that that daily close will be bearish, what you want to do is wait for price to go above the opening. So at this point, when it goes above the opening of the candle, it will actually be a bullish candle in that time. In that moment of time, the candle will be bullish. And if you know that that candle will close bearish, you want to sell when that candle is green. Because let's say that this is the higher, this is the high of the day. Let's say I sold here. I sold here. How much profit would I make today? This is the daily candle. If I sold here and I held down here, that's how you need to trade. That is literally the secret of my trading. Yeah. Now you haven't got it all. If you think I'm just gonna click off the video, I know exactly what to do. If I'm on a bearish day, I want to wait for price to go above the opening and then I want to sell till the candle closes bearish. That's it, I cracked it. You need to know how to know the candle closes bearish or bullish and where to buy and where to sell. Yeah, but that's what you don't want to do. Now, let's take that a step further. Let's take that a step further. Let's go to the weekly. Yeah, let's go on the weekly DXY. Let's remove all these. Yep. Okay. So the weekly. If you know, yeah. So we touched on the daily. That's the daily bias. But before you get the daily bias, yeah. What do you need? You need the weekly bias. And now I'm not going to go on to say that you need the monthly bias because the monthly is many days. It's too many days for you to. There's going to be too many up close and down close days. Yeah. In a nutshell, you want to start with the weekly. You want to look at the weekly candle and you want to spend as much time thinking, what are the chances of this weekly candle becoming bullish or bearish? Now, if you're saying that this is a chance game, there's no way you can know where that weekly candle opens or closes, or you don't know if it can be bearish or bullish. Let me tell you something. Imbalance. This is an imbalance, right? When price came and filled this imbalance and we got this rejection, and this candle closed like that, off that rejection of our aerial significance, what are the chances the next candle pushes up? We've filled the imbalance and we rejected. Now the next candle will do what? Most chances it will reject. So this week, what should you have anticipated? A bullish week. Now, let's take that a step further. Yeah? Actually, let's go. Let's go. Let's do something right now. Let's highlight this week. Yeah? That week is a bullish week. Now let's go on the daily. One sec, I just want just that week because this candle's inside of it as well. Okay, I'm just going to use the ellipse because this is playing about with me. So I'm guessing it was these days, yeah? If you know that this weekly candle, this one, which is the 17th of January, so it starts on the 17th of Jan. So it was from here, yeah? So this candle and this candle was a rejection off of the imbalance. Yeah, this was the imbalance on the weekly. This was a rejection off of it. Now we rejected off of it. Let's look on the daily. We rejected off of it. There's equal highs here. So what do we know? What does price do when there's equal highs? We know that price will go and deliver to that buy side liquidity. Yeah. So knowing that that week was going to be most likely the most probable outcome for that week was a bullish close week. What do you need to do? You need to wait for, yeah. Remember how I said, and now stick with me because this is where it can get a bit confusing. On the daily, what did we say? If you're going to be bullish on the daily candle, where would you want to buy? Where's the best possible buy? Below the opening. Because if you're anticipating the candle to close bullish, you want to wait for price to go below the opening so that you get close to the low of the day and you can buy and then you can go and exit when price makes the bullish close. That's on the daily. What about the weekly? It's the same thing. It is the same thing. And listen to this and make a note of this. The time frames are fractal. The only thing that is different from the weekly, the monthly, the daily, the hour, the 15, the 5 second, the only difference is The time it takes for the candles to close. The concepts that work on the daily work on the 15th hour. It's literally the only difference is the time it takes for the candles to close. Yeah? Okay. So in saying the daily, if you're bullish, wait for the price to go below the opening and you want to buy there and get out when price is bullish. Cool. That's the daily. Now the weekly. The weekly is built up of how many daily candles? Five. Five daily candles build up the weekly. And we know that every candle has what? An open, a high, a low, and a close. So if you know that that weekly candle is going to close bullish, what do you do? The same thing you do with the daily. The same thing you do with the daily. You wait for that candle, yeah, to go below the opening. And on the weekly, going below the opening might be one whole day of trading. Remember that because it's a weekly candle. And you want to buy at now. The question you lot are asking, and I know, is, but where do I buy below? We're going to get into all of that. I promise you, it's all going to piece together. I have designed this syllabus in such a way, everything will piece together. Yeah? In a nutshell, on the weekly, you want to buy below the weekly opening. If you're anticipating a bullish weekly close, you want to buy below the weekly opening. And you want to exit when that candle expands and becomes bullish. Is that not what you want to do? Isn't that logical? Buying low and selling high, or buying low and taking profit at the high. That's all it is. And how do you derive that? It's all from higher time frame analysis. Let's go back to the weekly on the DXY. When price was coming down here, and I got this rejection on the DXY, I knew that I am going to be bullish until this high is taken out. Now, how long did it take? It took 2 weeks to take that out. Yeah, it took 2 weeks to take out that high. I was bullish every single day. Yeah, every single day I was bullish to take out that close from this rejection. Yes, we had these two candles that would low closes, but remember it falls back to the fact that when that new weekly candle forms, there will be a day that brings it down. And what I'm saying now with the days, I'm going to tell you something. Every single week there will be so you know what, I'm just going to give you a lot of this gem. We're going to go over this in more in depth as the mentorship progresses. Every single week there's 5 trading weeks. So let's say that the week is bullish. The week needs to end bullish. Now you people watching this, my people, you are in control of the market. Your job, you are told, no matter what you do, you can manipulate this market however you want to do it. But what you need to do is you need to rebalance balances, deliver liquidity, and I want a weekly bullish close. For you to get a weekly bullish close, now what makes sense? Okay, let's think about this. Let's attack this question logically. What makes sense? You want to bring price down. Yeah? If the week is going to end bullish, what you want to do is you want to, in the first few days or the first day or two in the week, you want to bring price down, right? You want to bring price down to deliver all that sell side liquidity because you can't just go up every single day. You will leave a huge imbalance. So Monday and the Tuesday, you might go and make what? The low of the week. You will quickly make the low of the week, whether that's in 1 day or 2 days. Yeah? Max 3 days. And then on the end of the week, what would you do? You would push price up so you get the objective of the weekly bullish close. You might not realize what I've told you there, but it's very powerful. On a bullish close week, Monday and Tuesday may be down days on the daily candles. And then Wednesday, Thursday, Friday may bring it all the way up like this. For example, like look, this was a Monday. Yeah, this is Monday. Remember, this candle started on the 12th, yeah? This was Monday. Price came down early in the week, came down. Then Tuesday, Wednesday, Thursday, and Friday was a small range day. That is the power. Now, why is that so important, Omar? This is the daily candle. I don't trade off the daily. If you know where that daily direction is going, let's go on to 15. Yep, this is the trading of that candle. If you know where that daily candle is going, all you have to do is find an entry on the lower time frames. That's all you have to do. If you know that that daily candle, if you believe the fact that that daily candle will close bullishly, you need to wait for price to go below the opening. Find an entry that will allow you to get long, a smart entry. You don't just go and recklessly buy. You don't do that. I'll never condone that. You need to find models. Yeah, and we're gonna go into that later on because you lot wouldn't it wouldn't sit right with you lot right now. But I'm just getting the theory. I want you to think logically. On a bullish day, you want to buy below the low at the open of the day and exit. Now let's go back to the daily. The second part of this video I want to touch on is the importance of the higher time frame. This is the whole point of this section of the mentorship, the importance of the higher time frame. Why is it so important? Because the higher time frame dictates what? What does it dictate? Where the daily inside your intraday trading, the daily candle is the structure of your trading. You need to always consider where is tomorrow's daily candle likely to trade to? Yeah. So now we have this range. Yeah. Oops, one sec. You have this trading range. Yeah, and you're coming down and it's choppy. This order block. It goes down to the 50% of this order block and then goes up. So when we saw this order block, yeah, on the daily candle, when you see this order block getting respected, you're looking for buys. On the intraday level, in the 15 and 5 minute level, once this order block is respected, you'll be looking for buying. Yeah. Now, this candle comes down and this comes up. And then you'll see that this candle that went down into the order block 50%, this becomes a new order block for these candles. That is called propulsion. Yeah. When an a candle clears an order block, that one becomes an order block itself. And then now this candle is respecting this candle, right? And it comes up and you see that this candle respects this order block as well. This is propulsion. Starts from here. This is where the propulsion starts. This candle becomes an order block. This then becomes an order block. And you see this. Here, you just want to buy. Because what's happening? Bullish order blocks are becoming respected on the daily level. Yeah. So if you see, for example, yeah, if you see price coming into an order block on the daily level, yeah, if you see price coming into the order block on a daily level or any area of significance like a fair value gap or imbalance or whatever you want to call it, yeah, like here, you see that it's respecting this order block. You want to be a buyer at those things, and that's on the daily, yeah. That's on the daily level. You want to see the areas of significance. You want to see where is price reacting off of and where is price going towards. When you know where price is going towards, like this candle, right? This daily candle, I'm seeing this, yeah? I want to see there's this small imbalance here and this larger imbalance here. Now, there's buy side liquidity above this high. I want price to come, take this buy side liquidity and rebalance these areas. That's what I want to see on the DXY. So if I'm bullish on the daily DXY, what do I need to do on Euro USD and GBP USD? What do I do? If I'm bullish, I'm bearish on Euro USD and GBP USD. Yeah? That's on the daily level. So if I'm expecting tomorrow's daily candle to push higher into and take out this high, then what do I do on Euro USD? That means that I want this candle to come and take out this low and aim for this area of imbalance to rebalance this area of buying. So tomorrow, if I'm expecting this candle to rebalance this area, what am I doing? I wait for the opening, I wait for any sort of retracement above. Yeah. So there's this order block that I could retrace to. Yeah. There's this order block that price can retrace to. That will likely be above tomorrow's opening of the daily candle, and I want to be a seller and go down into my daily targets. That is the power of the daily, yeah? And now the next videos I'm going to introduce you to some crazy shit, right? It's literally gonna be stuff that you haven't seen before, or stuff that's been taught loosely on the internet. I'm going to show you what exactly to look for on the higher time frames. We're going to go into quarterly shifts properly and those type of things, right? But that's enough for this video. There's a lot in here, yeah? And I apologize that I didn't get the video out yesterday. I was really ill in the morning. In last night, I became ill, and in the morning I wasn't feeling too hot. I feel a lot better, thank God. So I made the video for you guys today. So it's unprofessional on my behalf. Like, forgive me for that. It's not a normal thing, yeah. But there's a lot here, yeah. I spoke about potential days of the week of their importance. Consider what I said about the weekly and the daily open and closing, and where, if you want to buy, where you want to buy from. That those are big takeaways, yeah. So any questions, yeah? And I know you guys will have probably questions about this one because this one is a lot. There's a lot to chew on here, yeah. Any questions, hit me up. I'm happy to answer anything. Actually, before I end the video, I get a lot of questions about the OTE. Now the OTE, right? This was a trade that I took, by the way, today. Um, so let's talk about the OTE. So with the OTE, you need a bias, right? So why I was short on GBP today, that was, oh my bad, that was equal highs here. I wanted price to come and take it, yeah? There was a bunch of equal highs here as well. So when price came above here, I don't just recklessly sell. I wait for an entry model. Yeah, now the OTE, all it is an entry model. So let's go on the 5 minute. So now when I see price come up and it's starting to break down, now this is the OTE, so the fib, yeah? If you're trying to sell, because I see a lot of you and you place the fibs the wrong way. So if you're trying to sell, right, you want to go from high to low and extend it out in time. Yeah. So we're just considering this high that I got it, and let's look at this high right here. Yeah, the lower the candle, I mean. Now, this is the optimal trade entry within 62, 70.5, and 79. Let me get the settings up for you guys so that there's, you lot can think. This is my settings, and you need it exactly like this. The colors you can change around the colors, but the numbers need to be in this order. Yeah. So you can pause the video here, and then you can just take whatever I have and you can apply it to your own one. Now, what does the fib show? It's showing nothing special. All it's showing, yeah, this is all the fib is showing. From this high to this low, if I want to sell, I want to sell at a nice and high price. Yeah, logically. The 50% shows 50% of this range from this high to this low. You want to sell above the 50%. Now, the 50 above the 50%, look for areas, yeah? So there's imbalance within this whole candle, yeah? There's imbalance. So you want to sell within this imbalance here. So look at the 70.5, for example, and between the 70 and the 79. You'll see it comes to the 79. It's not that these numbers are like significant. Oh, it has to bounce off the 79. It's what do the numbers line up with within the OTE? That's the takeaway. Is it lining up with imbalance? Is it lining up with order blocks? We're going to go way more into detail when it comes to the OTE. Don't worry. Yeah, that's all the OTE is. So when you're trying to sell, you want to go high to low, and it's just showing the retracements you want to get in on. Yeah, it's showing that price will retrace back above the 50. Now this is where we're looking to sell because it's above the 50. It's expensive now, and it came down. Yeah, now it came down and it created what? Another high. So we go high and we wait for the low. This is the low to here. Yeah, so high to the low, It came a bit above the 79. Your stop loss always goes a bit above the 1. Yeah? If you're going to use the OTE as an entry model, you want to put your stop loss above the 1. And you might say, but my stop loss is going to be way too big. If your stop loss is at the 1 and your take profit is at 0 or below it, you're going to get minimum 1 to 1. Be content with what the market gives you. You don't need, it's not everyday 5R, okay? Just please, just 1 to 1 is what I came up on and it's what's done me justice. 1 to 2 is amazing. 1 to 3 is ridiculous if you can get every day. Yeah? But anyway, now you're saying, oh, how do I know to use this low? You want to use the lowest low in the range before the retracement. Yeah? Before the retracements happen. So if this candle became lower, then I would anchor it at the low, at lower. Every single time there's a low, like something lower, you want to just anchor it. But this one is the low, yeah, because essentially on the 5 minute time frame now, this is the external liquidity of this range, yeah, from this one to this one, and within it is the internal liquidity, yeah. So if we want to boom, get in on the retracement, of course, our overall bias for this, why I'm selling it, is because I'm bearish. You can't be bullish trying to sell using the OTE. It won't work, yeah. You have to have your bias for the OTE to work. So that was 2 OTEs on GU just today. If you'd done it from here to here, you would lose the trade. I think this is an OTE here. Just to the 50%. Then this one to that one, OTE again. Now, this is a good example. Dangerously close to the 1. But if your stop loss was here, you're never getting stopped out on this trade. You're never getting stopped out. Yeah? Yes, it goes close. It goes way above the optimal trade entry. It's fine. Yeah? Wicks happen. That's fine. We accept drawdowns. Yeah? And then price collapses down. I think that's the 4th one. I don't think from here to here, that's not in the optimal trade entry. But yeah, then you see GU has completely tanked today. But I hope that helps. Any questions? I know this might be a longer video. Any questions, do hit me up. There is a lot what I said in the daily. The open and the closing specifically on the daily and the weekly. Please consider it. Look at areas on the daily candle. If you want to form your bias, bro, it is literally all in the daily candles and the weekly candles. If you know where the week is going, you have a good chance of knowing where the days are likely to go. Now, knowing where the day goes, intraday, you just got to navigate your way to get with the bias. That's it. And how do you know where the daily candles are going? Price is drawing towards liquidity and to rebalance areas of imbalance. So you have to look for where price is reaching to. And we're going to go into that. That's something called the draw on liquidity. You want to know what the draw on liquidity is, what price is, what is price chasing, what is the algorithm looking to do, where is it looking to deliver liquidity, where is it looking to rebalance the imbalance. That's where your bias goes. Where the algorithm is chasing, you're getting in, you're running along with it. That's what you're doing. But that's all for today, yeah? And any questions, ask me. Snapchat in the discussions question section of the Discord. I'm happy to help everyone. Have a good day, yeah?